Let's turn now to the impact of tariffs on American business. A new survey by EY finds that 86% of American executives affected by tariffs plan on pursuing M&A activity in response to trade restrictions. 72% say they're going to pass along any increases to their own customers. Here now to break this all down in a Fox Business exclusive is EY America's Vice Chair of Transaction Advisory Services, Bill Casey. Bill, what was the big standout for this survey, and how many CEOs did you survey?
We surveyed about 500 CEOs in the U.S. And clearly what sticks out from the report is that this is going to play out over a couple of years. And in the short term, companies are reacting to this, either by tweaking their procurement strategy or looking at M&A as a way to offset some of the impacts of the trade restrictions.
When you say tweaking procurement strategy, that means sourcing goods from countries not hit by these tariffs? Is that
potentially? Because the first decision is you have to get a perspective on how long you think these tariffs will be impacted. And over 50% of the respondents think that these tariffs will be in play for at least 2 years. So decision one is, do you think it's long-term or not long-term? Then is, can you design the product that you're sourcing from a lower-cost country out of your good? And if not, then you have to look at other strategies.
So in this poll that you guys did the tariffs obviously serve as a tax to these companies, but do any of the CEOs talk about the positive side of it, where they're seeing a stronger economy here in the U.S., where just the demand or the pricing pressure they now have to the upside can outweigh the tariffs possibly? Yeah,
I mean, it depends on your perspective. From a consumer standpoint, the price of these goods, at some point, it's going to have to go up. If you can't push it down the supply chain, ultimately you're going to have to push it to the consumer. On the other side, obviously this is going to stimulate investment in the U.S. and would create jobs. And the U.S. continues to be a very attractive place for investment outside the U.S. So we see a lot of M&A inbound activity as a result of this.
What about vertical integration? Obviously, a lot of these businesses, I'm sure, are, that's the ultimate goal. And you see a lot of the businesses now that are more successful, those that are able to do that. Is that something that you found in your report?
Yeah, absolutely. So the question then is, if you can't import the goods, you're going to invest in M&A or invest in the businesses here in the U.S. to vertically integrate that. On the inverse of that is, if you're exporting goods, it may be cheaper to vertically integrate outside the U.S.
Is it safe to say that the overall economic impact and the impact on the end customer or consumer will still be very small? Because, again, if you look, I was looking at the Caterpillar numbers when they came out trying to estimate what the cost of the tariffs would be. In terms of their overall business, it was like close to $100 million for the year. I mean, that's a big number if you look at it in a vacuum. But in terms of the overall billions and billions of profits that a Caterpillar makes every year, it's quite small.
Yeah, clearly on the tier one suppliers in the supply chain, I think the impact is what you're seeing is not that significant. I think where this plays out, and again, this will play out over a couple of years. When you go into the supply chain for the tier two, the tier three suppliers, they're probably larger impacts, but that's hard. It's really hard to tell. And I think part of this always really comes down to, are these tariffs going to be longer term, or is this going to be shorter term? And I think, that needs to be played out.
Did the executives talk about the politics of it all? Because in this survey it says, our respondents believe tariffs will last until at least 2020. Well, that's the election year. So, again, President Trump's going to be in office until at least through 2020, if not another 4 more years. Are they looking at it through the lens of politics?
Yeah, it's difficult to say through this survey, but one of the other factors considered here is most of these agreements with suppliers are 2 to 3 years.
Okay.
So a lot of this stuff is locked into place already. So and certainly it weighs into this. So we'll see how this works out.
Can you talk about the age differences that you noticed in the survey here? The differences between, generations, baby boomers versus Gen Xers. People growing up when, in the quote here, free trade was, quote, an assumed policy. Talk about what the poll found on that.
Yeah, well, when you go back and you look at the impacts of the financial crisis, the free trade was to solve all these problems. And that whether governments imposed tariffs or governments push for nationalism, that free trade would override all of those controls. And I think it's a different economy now. And for the folks that are above 50, they have a longer-term view on this, that the impacts will not be as strict. So for the generation in the 20s and 30s that hadn't lived through that global financial crisis, Now, they have a different view. I think they're viewing that the impact would be more severe.
I love how Ford's CFO in the after the earnings told reporters that tariff-related costs and unexpected erosion of results in Europe and China prompted the company to retreat from its 2020 margin report. But I love how Ford says that when Ford and General Motors and Chrysler have benefited since the mid-'60s from a tariff that the United States has in place on light truck imports. It's called the chicken tax, 25% tariff. It's related to a fight that we got into with Europe or France over poultry. And so that's been in place forever. So these automakers have benefited. So there's upside depending on where that tariff hits.
Yeah, and when you look at supply chains, and for the large multinational companies, these are very, very connected and very complex supply chains. So the capital will ultimately flow to where the path of least resistance. So, hence there's a lot of M&A activity to do workarounds with respect to this. So this is why we're seeing so much activity. And as we mentioned in the survey, 86% of the companies that are impacted by these tariffs are going to either buy something or sell something. But I'd say the good news from the U.S. is that most of these acquisitions are going to occur in the U.S.
Yeah, that's phenomenal.
That's phenomenal, indeed. Bill, thank you for being here.
Thank you.
Great to see you. Bill Casey of EY.